Well, folks, the bull run continues. Wake up today, make another $33,000 in the public account, up a whole bunch more in other portfolios. This is how it should be. Congratulations to all people hitting all-time highs in your portfolios. Absolutely incredible. This bull run's just marching on. I signed up yesterday. Six people in the private stock group have hit seven figures in the past week. 6 people, like absolutely incredible, right? Another 8 people hit 6 figures plus in my private stock group. Absolutely incredible to see all the success that people are having. It's a lot of fun in this bull run, right? Now, remember what I said right here. I put this in breadcrumbs in my private stock group's Discord chat. I said, scale, and the bull markets survive the bear markets, okay? Survive the bear markets. That's going to be very important as we talk about this video here today, okay? So in this video, I'm going to run you through how much longer this bull run we're on, how much longer it can last. My hair is crazy today. I haven't really got to see it. I've just been working since I got up, and I'm just looking at that hair now, and I'm like, oh my gosh, that's interesting, okay? We're going to talk about how much longer this bull run is going to last, in my opinion, okay? And I'm going to share some data with you to kind of show you what's likely to play out here, okay? Second thing we're going to talk about is what are the best stocks to own over this next 12 months? What are the best stocks to own in 2025? Because there's going to be a major flip that's going to happen here that I need to explain to everybody, and that's going to be extremely important because certain stocks that have been absolute animals might not be the animals in 2025, and I'm going to explain why. And other stocks are going to catch a bid that have not really caught a bid over this last 2 years, okay? So it's not the stocks you think about. Alrighty, guys, it's a busy, action-packed video. I hope you appreciate me doing this video for you. I appreciate y'all joining me. The only thing I ask in return for today's video is for you to smash that like button. Make sure you subscribe to the channel. I've been putting this together since I woke up. Clearly, my hair says that right? So I appreciate y'all for being here. We just hit a new all-time high subscribers in the history of this channel. I appreciate y'all for being here. Pin comment down there if you're looking to access all my best courses, teaching you everything I got up here in my crazy hair head, okay? As well as get access to my private Discord chat, exclusive weekly videos from me, all that good stuff. Pin comment down there, fill out a form. We'll see if we can get you access to all that, okay? Alrighty, so where I want to start out is Tesla stock. This is so important I started with Tesla stock here today in this video. The reason being is this stock is an absolute animal right now. We're now up close to 3,300% on Tesla stock. It's another 5% plus move here today. The stock can't be stopped in the short term, right? It's just running its own race. It seems like every day you wake up and Tesla's up again and again and again. You're like, my gosh, like how much longer can this really last? In regards to Tesla, this is an absolute insane move. We'll speak about that, right? Meta continues to run. I felt like this the whole year. I'm like, Meta feels like it wants 700. It feels like it, man, before year end. I don't know if it's going to get there, but it feels like it wants 700. And this one continues to perform tremendously, right? Now up $863,000 on that stock. Palantir. Oh my gosh. Palantir. Every time you think Palantir is done, right? Every time it has one of those days where it gives back gains, you're like, okay, the run on Palantir is over. It comes back and like sets a new high. I think today's a really good example of that. Palantir was down significantly more toward the first few hours of trading, and I just kind of watched it come back to life as the trading day went upon. Like it's just insane. Like it's one of those stocks you're like, geez, 885% gain on this one now, and this is a stock I only got in 2022. So it's not like I've been in this stock for many, many years, like let's say Tesla or Elf or some of those stocks, right? SoFi continues to be an animal. It feels like SoFi wants $20. Congratulations to all those SoFi bulls out there as well. Like absolutely incredible. Now up 138% on the stock. This one continues to see momentum, and it's really not going to stop here in the short term, okay? Now, the end of the year play has certainly been Tesla and certainly been Palantir. Like it's very simple. Like that's been the end of year play. Everybody's really been piling into those stocks. And you got to understand, like if you're going to play catch up with the market, right? And remember, I explained this to you guys months ago, what was going to happen here at the end of the year. What did I tell you is going to happen? I told you a lot of funds are underperforming the market, right? I told you they're going to have to play catch up to the market. Usually when you have the S&P 500 have a beast year, a lot of funds underperform the market. They need to try to play catch up to S&P 500. So how do they do so? I'll tell you how they do so. Exactly what I told you several months ago. They buy into whatever the stocks are that move the biggest and are likely going to have the most upside in the year end. So where do you pile into? You're going to pile into stocks like Tesla, stocks like Palantir. You're going to play call options, right? You're going to try to get some gamma squeezes out there. That's the playbook you're going to play. You're going to run into those because those stocks move heavily, right? And so if your view is, I need to catch up to the market, you're going to buy Tesla, you're going to buy Palantir into year end, hope those ones continue to move, and the more buying pressure that is created in those stocks, the more upside there is, right? And next thing you know, you can be somewhere in relation to the S&P 500. So then when you go to talk to your clients in the new year and you show them, here's your end of year investment report, it says like something that's close to S&P 500. So your client, your high net worth individual that's your client, doesn't run away from you and say, dude, like, why do you underperform the market so much? You know, you just got to kind of be close to it. Or maybe you can overperform it a little bit and they're like, oh, okay, market was up blah, blah, blah percent. You were up that more percent. Good job, okay? You got your 2 and 20 there, right? Now, I could look at the negative side of Tesla, Palantir, these sort of stocks moving, right? And I want to take the negative side and then I'll show you the positive side. You got to always understand in the market, and this is very important, especially if there's any newer investors watching this video right now. Like, let's say you're in your first year of investing, like you're a brand new newbie, you're just getting started in this game. You always have to look at everything glass half full and glass half empty in regards to your stocks and in the market in general, okay? So let me take the negative side first, glass half empty, and then we'll take the glass half full. If I was looking at these moves in regards to Tesla, Palantir, these sorts of stocks, right? I could make an argument that they're just rolling, and some of this I actually truly believe too, as a Tesla and Palantir shareholder, right? These stocks are moving huge because of Trump optimism. There's a lot of Trump optimism. It's clear as soon as that election was done, and I told you guys before the election, I said Trump's going to win, right? It's not even going to be close. I called that. And what else did I tell you? I told you that the Wall Street wants Trump bad, right? And I said that's why the market's moving up prior to election, and you'll see it move up significantly after election. That's exactly what we've seen play out, right? So we have Trump optimism, and that's helping those Tesla stocks, Palantir, all those sorts of companies, right? And obviously Elon Musk's relationship, being close with Trump, it's just a lot of euphoria, optimism, positivity, right? 2, retail has money to invest. Retail didn't have money to invest for several years because retail really got devastated by inflation, right? Real wages are now in a good place again, which means retail investors have money to invest, and they're investing it out there, right? And we see that in a lot of these sorts of companies, right? 3rd thing is Santa rally. What I got to tell you guys is going to happen. I said we're going to have a Santa Claus rally. Sure enough, we've had a Santa Claus rally all the way, right? And then, like I told you guys, the hedge funds are going to have to play catch up to the market. I laid all this stuff out for you guys over the last few months, and it's exactly what we see play out, right? And the 4th thing is we have no earnings now at this point in time, right? From any of these major companies. Tesla's already reported their earnings a couple months ago, Palantir. So you don't have to worry about earnings right now, right? And so you get to just kind of run off of optimism. You get to run off of hope, those sorts of things, right? Excitement. You don't have to worry about what are the numbers. No one's worried about numbers right now. It's just there's a good feeling in the market, right? Now, after earnings, we can get a big snap back to reality, right? Because once we get through the new year, Trump's going to be in office, right? Next thing you know, then the market starts looking for the next thing. Then we start talking about earnings again. Then the numbers start mattering again. The margins, the revenue growth or shrink, right? All that stuff starts to matter, so we get snapped back to reality. So the way I would kind of put it to you, it's like a kid in summer break now. I didn't get to grow up like I think most kids grew up, right? I went to work with my dad out in 110 degree heat, 120 degree heat every day, right? Cleaning pools all summer when I was on summer break. But I would imagine for most kids how it looks like, right? They don't get up at 4 or 5 a.m. like I did when I was a kid. They probably wake up at, 8, 9, 10 o'clock, sleep in, and they wake up, play around, maybe play with their friends, maybe play video games all day. And it's just like this glimpse into this life of not really much responsibility and just chilling and having fun, right? Then school starts again. And all of a sudden you got to start waking up at 6, 7 a.m. And oh my gosh, whoa, it's getting real again. Now I got to start studying. I got to try to get good grades. I got to try to manage a bunch of relationships with people I might not like, right? You got to deal with the bully. You got to deal with this person, that person. All of a sudden you get a snap back to reality. That's kind of like the market right now. The market right now is in summer mode. It's fun. It's chill. We're just living life. We're running off vibes right now, right? Earnings come, we snap back to reality. And all of a sudden it's whoa, whoo, okay. This is real again. Oh my gosh, things actually matter again. Okay. Now, if I want to take the positive side of this story, right, which there's always some positive and negative and everything, I could easily take the positive as well, right? With you look at Tesla, you could say, well, yeah, it's moving off optimism and all this stuff. It's true. But also, you see something like what came out last week, And this could be seen as a massive positive for Tesla. This is looking at market share in San Francisco for Waymo, Uber, and Lyft. And what we've seen is Waymo absolutely take off like a rocket ship over this last 18 months, right? Now, you might say, okay, that's just one market, San Francisco, big deal. What happens in 5 years when Waymo, Tesla, these sorts of companies are in all these different markets? What do you think is going to happen to Uber's market share, Lyft's market share, and what do you think is going to happen to Waymo and Tesla's market share? My guess is if we look out 5 years from now, 7 years from now, certainly 10 years from now, Waymo and Tesla are likely dominating, and then Uber and Lyft are, I don't know where Uber and Lyft are. That's a big problem with Uber and Lyft. We just don't know, right? Especially 10 years from now, we don't know. 5 years from now, Uber and Lyft are still going to be around. They're still going to be relevant. 10 years from now, I don't know, right? So that's a problem with those two stocks. But what we do know is Waymo and Tesla are likely going to command massive market share as robo-taxi fleets take off over this next 3, 5, 7 years, right? And the market share they can grab will be very quick. Because at the end of the day, if one offers you a ride for $10 and the other offers you a ride for $20, and also expects a tip, what are you going to choose? We know what everybody's going to end up choosing in the end, right? Which is exactly why Waymo and Tesla end up taking the market share. Now, additionally, this is very important. People don't understand why Google stock's moving up so substantially right now. They're like, oh my gosh, it's up 26% in the past 3 months. It's moved up heavily over the past few weeks. They think it's something to do with the quantum computer. Ask anybody that knows anything about that technology on a high level, and they will all tell you that technology is going to be awesome someday, but there's no real world applications for it for at least 10, 20 years out. So that's not why Google stock's moving so huge. Google stock's moving so huge because of this chart I just showed you. And people are realizing this could be $1 trillion opportunity. Some are even saying $5 trillion opportunity for Google. I don't know if I want to go as far as to say that, but there's no doubt it's a massive opportunity for Google as Waymo gets in more and more cities, and they seem to be expanding pretty rapidly. And imagine as they take that market share, right? And there's a lot that can happen inside those cars in terms of advertisements. And obviously, who's the biggest advertising network in the world? It's Google McDougal. So there's a lot of opportunity there, right? And then if there's, millions, tens of millions, hundreds of millions of people going on an app every day to catch a ride somewhere, it's just another way of feeding them more ads. Oh, and then if you know where they're going, right, then you can also feed them ads from competing places. They're going to that restaurant over there. Why not give them a coupon? Why not another restaurant give them a coupon to this other restaurant, right? To try to steal them away, right? Hey, we got buy one, get one free appetizers today. Whatever. There's a lot that can happen here over the next decade in regards to Google. That's why Google stock's moving up so huge, because people have kind of discounted Waymo, and now all of a sudden they're realizing, oh, wait, no, this is actually a crazy big opportunity here. And that's why Google just continues to catch a bid and likely will continue to for at least the short term here, right? Tesla. If you're wondering why Tesla's catching a bid right now, it's up 99% in the past 3 months. It has nothing to do with auto sales. It has nothing to do with energy sales, anything like that. Tesla's catching a bid right now because we're in a very kind of euphoric market, and you see stuff like this data and people are saying, oh my gosh, where could Tesla's market share be 3 years from now, 5 years from now? Maybe this can happen a lot quicker than people realize, right? This is what's going on out there now at this point in time, right? Now, Palantir, if we talk about Palantir, why does this stock continue to move up? Well, first off, the company's revenue just kept decelerating in terms of growth for the longest time, right? But suddenly about 6 quarters ago or so, growth inflected positive, and we started to accelerate revenue growth, and then again, and then again, and then again, and again. And now people are starting to think with DOGE, the Department of Government Efficiency, the relationship that Palantir has, and Peter Thiel, and Elon Musk, and all this stuff, people are running to some assumptions now that Palantir might get to 40% plus revenue growth, which now they're at about 30%, right? And if that happens, Palantir's got more room to run here. If Palantir all of a sudden gets back to 40% plus, look, I shouldn't say get back to. Well, they would be back to, right? If they go 40% plus revenue growth, Palantir is going $100 plus. That's where their stock's going. If they don't do that and they keep coming in the 30s, then we're probably going to stagnate for quite some time. If they ever go back to the 20s again, we're going to crash. At least in terms of if they all of a sudden came in with a quarter that revenue was up 25% or something like that, the stock's crashing. It's going to be an epic crash right down to $30, $40 a share, right? But for now, it's optimism. It's hope. What if we get back to 40% plus revenue growth, right? That would be insane. And so that's what we're running off of. Now, I am a little skeptical of this as a Palantir shareholder, of this thought that we could get back to 40% plus growth. And here's why. I'm seeing some of the activity here recently, right? The chief technology officer, Big Dog, executive vice president, he's usually always on the conference calls. He talks probably the second most about Palantir other than Alex Karp, right? He recently offloaded 5.2 million shares of Palantir, it says here, for $367 million. Now, you know, a lot of times I don't really care that much about insiders selling or, you know, selling stocks especially because it could be so many reasons. But this one was pretty substantial. 5.2 million shares, only holds 752. I'm like, if you really thought Palantir was going to get back to 40% plus revenue growth, I don't know why you would sell your shares. That just doesn't make sense, right? Unless you think you're going to kind of be like a 30% grower, and then that puts your stock in a tough situation, or especially if you think you're going to go back to the 20s, then it definitely makes sense for him to cash out here, right? Alex Karp, this one also came out last month, right? Alex Karp sold about $400 million worth of stock, not a small number. So when you see stuff like this makes me a little skeptical, this thought process of like 40% plus revenue growth. I hope it happens, but not that optimistic, especially when I see stuff like this, right? I'm like, you know, we're probably going to have really good growth rates, probably be in the 30s for the entire year of 2025, and then we'll see what happens in 26. But, you know, I don't know. I don't see it in terms of that 40% plus growth, but I hope I'm wrong in regards to that, right? I just don't think I am. Nvidia, look at this. Nvidia falls into correction territory, down 10% from its record close. Folks, I show you this because this shows you how fast sentiment can shift in the market, right? Everybody and their grandma wanted Nvidia stock 6 months ago, going into this year, going into last year. Like everybody wanted Nvidia. Like it was the play. Before it was Palantir and Tesla, it was Nvidia, right? Everybody wanted Nvidia. And look at this. This stock's now in correction territory while the NASDAQ's blasting off to all-time highs. Who could ever thought that? And did Nvidia magically report bad numbers? No, Nvidia's last numbers were great when they reported last month. The guidance was phenomenal. The conference call was phenomenal. There's nothing you could say bad about it. It was banger across the board. And look at the stock's in correction territory with a NASDAQ at its all-time highs. This shows you sentiment can shift fast. So if you don't think sentiment can shift very quickly in regards to Palantir, Tesla 6 months from now, like it happens quick, man. It happens really quick. And what's also fascinating about that is Nvidia a lot of times moves upward when Bitcoin's moving forward, downward. You know, you could actually follow Bitcoin and Nvidia over time. A lot of those times when both are going up, they're both going up, right? And then when one's going down, the other's going down. Like it's absolutely fascinating how that works. So you got Bitcoin at all-time highs, NASDAQ all-time highs, and we got Nvidia that's just like doing what? Like in correction territory? That's insane, right? No. I don't know how many of you guys have seen this before. Hopefully a good amount of you guys have seen something like this. Market cycles, right? And this is how noobs think in regards to a market, right? You know, you kind of get in a stock, it starts going up, you get optimism, like this is real, you get the belief phase, let's invest it all, thrill, everyone buy now, and then euphoria, I'm going to be rich, right? And that's the market cycle, right? Then you have a downtrend, then it comes back a bit, complacency, let's coast a while, right? Then it starts going down again, you get anxiety, like, oh my gosh, I'm freaking out, like what's going on with my stock here, or asset, right? Bitcoin, whatever it is. Then you get into the denial phase, it'll come back, like it's just down right now, right? And then you start to panic because it just keeps going down, capitulation, I'm done with this thing, right? And then you go through the anger phase, like whose fault is this? Like, can't be my fault, right? And then eventually you end up accepting fault for it, right? And you realize, oh, this is my fault. I was in this asset. I thought it was good price. It was bad price, right? And, you know, I'm an idiot phase, right? Then, you know, things start to come back and it's like disbelief again, right? And so this is how noobs think in regards to the market. And so this is phases that happen, right? And I watch this, as a Tesla investor, I watched this whole phase play out before in Tesla stock, right? This whole phase, I watched this play out at the end of 2020 into 2021, right? And then we went through this phase. And then we went through this phase on Tesla, right? And if I took you back, you know, 2 years ago in Tesla sentiment, 2 years ago Tesla was barely over $100 a share. I could tell you it was in some phase around here, right? Anger, depression phase, something like that, right? And even the sentiment a year ago in Tesla was still pretty bad. Even 6 months ago, it was still pretty bad, right? But now we're back into one of these phases in regards to Tesla. It's just the debate is where are we at? We have belief, we have thrill, or we have euphoria in regards to Tesla, right? I watched the same thing play out in regards to Palantir, right? back at 2020, 2021, people were in this phase in regards to Palantir. Then it went through its crazy crash in 2022, and that's when investors like myself stepped up and started to buy the stock, right? And meanwhile, people that have been holding Palantir for years, they sold all out completely, or the ones that held through were usually in these phase of like anger, depression in regards to Palantir. Very few were like really, truly optimistic about the long term and those sorts of things, right? And then when Palantir did start to go up, a lot of people were in disbelief. Like they went through that whole phase of like disbelief, and then it was like, I don't think this is going to last. Like what's going on here? This is what you go through in market cycles, and this is, this will play out again in Tesla. This will play out again in Palantir. This will play out again in Nvidia. Like it's just one big game of going through this roller coaster ride of emotions, right? And you usually know you're toward the top when people start. I usually know when we're toward the top of a cycle when a few things I look for. And we're toward the top of a cycle. Now to call the top is difficult, but when you know you're toward the top when I have countless people around me, friends, family members, whoever, who are telling me to buy Bitcoin. I've had so many people tell me recently, buy Bitcoin, babe. Where were these people at 2 years ago? No, none of my friends or family was trying to say, go, you got to buy Bitcoin right now. But now all of a sudden, everybody, hey, you got to buy Bitcoin. Go big on Bitcoin. Last time I saw that, guess what? Was about 6 to 12 months before Bitcoin had an epic fall, right? Now we're in this cycle again where, people are throwing out these massive price targets, right? Tesla to 10 trillion, right? Palantir to whatever trillion. Just people are throwing out really, really, really wild calls, right? And you can throw those out in this sort of market where, these sorts of risk assets are doing very well. But as soon as things flip the other way, people will run from those, right? That's what ends up happening, right? You got to, at the end of the day, I'll show you how I think, okay? This is how I process as somebody that's been investing in the market 16 years. I run numbers. I research companies. I listen to conference calls. I listen to investor presentations, right? I run numbers. I run projections. I do SWOT analysis on all my companies, look for the strengths, opportunities, threats for all these different companies, right? And we go ahead, we see if it's a good price, if it's at a fair PE, what I should get for likely a compounding annual growth rate. I run some different scenarios. I run a base case, a bear case, a bull case, an ultra bearish case, and an ultra bullish case. And then I look at everything over and I say, okay, this makes sense to buy this asset. Or this makes sense to sell this asset. That's how the real money plays. That's how the 1% plays. All this other crap is just crap. And this is how the masses think. This is how the masses invest. This is how the masses invest. You gotta back it with numbers and data. You gotta do different scenarios. What if things go much better than expected? What's worse than expected? This is how you gotta process your information. To play this game is a losing battle, because what you're gonna just do is end up buying crazy here. You're gonna end up selling crazy here. You're going to end up leaving the market. And we know we lost a lot of people in 2022, right? There was a bear market we went through. It was nasty, especially for a lot of the popular growth stocks. It was a nasty market. We lost a lot of people, man. A lot of people. And I don't think those people have returned. Or if they have returned, maybe they started returning recently, which is very, very scary if that's the situation. But that's what plays out. And so you got to understand this is just one big game, and you got to know how to play the game, right? Now, if you're wondering how much longer can this market last, right? Well, here's some data. So if you didn't know, I was born in 1989, barely made the 80s, baby. The 80s, what a time to be alive. I barely made it. So I said, since I was born, right, which I'm 35 years old now, what's happened with the market after you had a down year, right? Well, I came into the world and the market was booming, baby. We were up 27% in the S&P 500 when I was born. That's what I'm talking about. And then right after that, we had a big dip. Well, big dip. 6.5% S&P 500 went down. That was followed by 3 up years. Then we had a down year. Not a big down year, down 1.5%. It's like nothing, right? And that was followed by 5 up years. 34%, 20%, 31%, 26%, 19%, right? So we had a 3-year bull cycle, 5-year bull cycle. Keep these numbers in mind, right? Then we had the tech bubble crash. Epic, arguably the most epic stock market crash of all time. Certainly of modern times, right? The only thing you could say in relation to that is like Great Depression type stock market crash. But the tech bubble was a 101 in modern times, right? Down 10%, down 13%, down 23%. Now, What was that followed by? 5 up years. Then we had a down year, great financial crisis. Boom, 38.5% down. That was followed by 6 up years. This one says 0%, but technically it was up in 2011, okay? Technically, based upon the numbers here. So we had 6 straight years up after a down year. Then we had a down year, slightly, 0.7% in 2015, followed by 2 up years. A down 6% year in 2018, followed by 3 up years. Then we had our big down year in 2022, down about, a little under 20% there. And so far we've had 2 up years, right? So the moral of the story is, and this is really in modern times in the stock market, a bear run is usually 1 year. And then those are followed by 3 to 5 year cycles upward. So we've now had 2 years. So if this is a normal bull market we're in right now, we probably have another year to 3 years left in this bull run, okay? If this is a normal bull run. That's something to kind of keep in mind there. I just took you through modern times. Like, if it plays out how it usually plays out, we might have 1 to 3 years left here. But with that being said, it does not mean it's smooth sailing. Because by just looking at the overall numbers in a given year, it can give you a false assumption that the market was all stable. Not necessarily true. For instance, Tom Lee made some waves last week, and Tom Lee's known for making a few waves in the market, right? He made some waves because his 2025 projections came out for what he expects for the market. And he expects the market to blast higher at the beginning of the year. S&P 500 to go to 7,000, followed by a crash down to the 5,000 range, which would be steep and severe, followed by a Q4 rally, right? Back to 6,600 in the market. So I don't think this is far-fetched. I think this is a very possible scenario Tom Lee has. I don't think this is crazy at all, right? At some point in 2025, reality is going to set in, right? And I think at some point, there's a high probability the market is going to get freaked out, right? I don't know what it's going to be about. Maybe it's about tariffs, right? Because right now it's just talk of tariffs. There's nothing actually going through because Trump's not in office. What happens when Trump's in office and tariffs are actually going through and companies have to start to react to that, right? And companies have to say, oh my gosh, we're going to have to ship production, we're going to have to do this, blah, 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 okay? Tariffs, maybe that's it. Earnings, maybe all of a sudden we get an earnings malaise in the second quarter or third quarter or something like that, right? That kind of leads the market to be like, oh man, like we're going to have trouble hitting S&P 500 targets for earnings. Maybe it's that, right? Maybe we get inflation to start coming back in the middle of the year. And all of a sudden oil price starts going beast again, right? And you get a commodities bull cycle again. And that would lead to a lot of fears around inflation, which then would lead to fears around the Fed pausing, right? Then that leads to a lot of fears. If the Fed pauses and they announce they're pausing for now because inflation's coming back, people are going to freak. Like they're going to absolutely freak out because they're going to view that as what's the next step for the Fed after a pause? Up again. So they're going to start to worry about, oh my gosh, like we're in the 1970s again. Inflation's coming back and the Fed's going to have to start raising rates again, maybe higher this time than they did last time, right? That would lead to a whole situation. You could have maybe an over-leveraged situation happen or something we don't even see coming, right? But I would say there's a pretty good probability it's going to be something or multiple things that happen throughout 2025 that will get the market to shake up in quite a substantial way, right? So my guess is the Trump honeymoon wears off, sometime shortly after he's in office. I don't know if it's like 1 to 3 months or more 3 to 6 months or more 6 to 9 months. But I believe shortly after Trump actually gets in office, that honeymoon phase will wear off, right? Which the honeymoon phase, we're in it right now, even though he's not in office. And then we'll probably be in it very shortly after he gets in office, right? And just a lot of optimism about everything's going to be better. And then, slowly but surely people will realize, oh, these things take a long time. If you are going to change any policies, it doesn't magically fix things overnight. And they're going to start to realize, oh, crap, we priced in a lot here and it might take a long time, or certain things might not get through that people thought were going to get through. And they're like, oh, dang, like this isn't happening, right? So that's my guess, right? And then the VIX starts spiking and then fear starts breeding fear. We haven't had any fear for a while, right? Now for 2 years, we've been in an upward bull market, which means people are just getting more and more optimistic. The longer a bull market goes, the more kind of euphoric people tend to get, right? Which the more euphoric people tend to get, the more when you do get a fear phase, it starts to be taken really serious really quickly because people haven't felt it for a while, right? In 2023, for instance, it was hard to get people that fearful because we already went through 2022. let's say in late 2020, it was hard to scare people in the market anymore because we already went through Rona. So we already felt like we went through the worst of it in the first half of 2020, right? So that's something to kind of keep in mind there. That's my guess and kind of what happens with the market, right? Now, also there's a false belief that when Trump gets in office, the market's just going to be smooth and it's just going to be up, and there's going to be no drama and nothing like that, okay? Listen, for any of you guys that did not invest under Trump 1.0, Trump as a president can be very volatile, and the market can be very volatile, okay? I don't know if you guys were in the market, but I surely was in the market December of 2018, and I was getting shredded. Stocks were on track for their worst December since the Great Depression. You heard me right. Whenever you're on your worst, you're on track for the worst since the Great Depression, you know it's bad, okay? This was a crazy market at the end of 2018. It was brutal. Look at this out of Business Insider, right? December 18, 2018. Grinch-like U.S. stocks are on course for the worst December since the Great Depression. U.S. stock markets are set for their worst December since 1931, when the country was in the depths of the Great Depression. The S&P 500 has lost nearly 8% of its value this month, eclipsing the 6% fall witnessed in the final month of 2002. Tech bubble, boom, 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 right? So, you know, we could be in for some drama and some fireworks, and I don't think people invested under Trump the first time, so they're of this assumption that it's just going to be every day is going to be up and it's just going to be grand, and I'm just here to enlighten you a little bit. You better be ready for some fireworks, man, because we're going to have some drama. Now, with that being said, stay invested in the market. Buy the dips in the market, right? Don't try to time it out. Don't think you're so smart like you're going to be able to time this out. Like say this Tom Lee scenario. Oh, I'm going to be able to time this out. Who knows? Maybe Trump gets in office and then shortly after we have a major correction or crash in the market. We don't get that Tom Lee rally, right? And then who knows? Maybe when Tom Lee was thinking we were going to go down the market, we're going up in the market, right? So the moral of the story is stay invested, buy the dip. If you get any of those big dips in the market, right, and SP 500 goes down to 5,000, take advantage. Load up on stocks. As long as you got more income than expenses, you're ready to buy, right? If you don't have more income than expenses, you need to get on that. I keep preaching that, right? I show this graphic when we're usually in a tough market, right? And I want to show you guys this so you kind of get into the right mentality, right? Especially for a lot of you newbies, I'd say most of you guys watching this video, you're already on this mentality, but for some of the newbies, you need stuff like this, right? Build a portfolio you'll be proud of years from now. 2, staying diversified is your alpha long term. If you want to know how you get through the bear markets, right? Those really tough ones, those major corrections, SP 500 goes down 20, 30, 40%, 50%, whatever. The way you get through those markets, right, is you got to be diversified across growth stocks, value stocks, dividend stocks. And you've got to own plenty of companies that are very high quality. High quality means they got business models that can make it through downtimes in the economy, high inflation, low inflation, high unemployment, low unemployment, whatever the situation is that's thrown at it, they make it through to the other side. That's how you get through a bear market, right? People that are over leveraged, under diversified, many of those people don't make it through the bear market to the other side. When we're talking about market cycles, you gotta thrive. You've got to be invested heavy into growth stocks in those bull cycles. But when you're going into a bear cycle, drama cycle, that diversification comes in clutch, I can tell you that. Growth, value, dividends, hedge, cash. We'll talk about hedging in just a moment and how I hedge personally. Conference calls are non-negotiable. Put in that research work. The bad thing with up markets, the really bad thing with up markets where it just seems like the market's going up and up and up, it makes for lazy investors. Lazy bunch. An embarrassing bunch. A bunch that I wouldn't want to associate with. Disgusting. Disgust me. Lazy bunch. And why? Well, let's imagine you just get in the market and you throw some money in some stocks and it just goes up and up and up. You're like, oh, this is so easy. Oh my gosh, I should have been doing this 100 years ago. It's so easy, right? You don't realize all the work that goes in behind the scenes, right? You're like a kid that joined a football team and you suck and you don't put in the work, right? But you get to win the games while you sit on the bench because all your other teammates are good. That's what we're talking about. Conference calls are non-negotiable. You got to listen to those babies. If you don't put up the time to listen to a conference call, you deserve to lose all your money. All of it. Every penny. You got to be willing to put in the work, right? And we always know the ones that put in the work always reap the rewards. It's the way it's always been. And the ones that are lazy, you don't need to do this. It's easy to make money. What do? You're going to falter, and you're going to falter big, and then you're going to look for somebody to blame it on, and at night, you're going to have no one to blame it on but yourself. And you're going to have to accept that, right? Conference calls are non-negotiable. Know your stock's financials. I bet you a lot of newbies in the market, if I ask them what the forward P is for XYZ stock they own, they wouldn't even know it. They wouldn't even know it, right? Know your stock's financials. Know your stock's metrics. Outwork and outsmart everybody else. Buy the dip, never trip. Take advantage of those opportunities you get out there in the market when you're going through those tough times, right? Now, how do I hedge, right? Well, I'll hedge differently each year. So as far as this year goes, I'm hedging with some toll puts. How long I'll keep those on? I don't know. We'll see. Maybe it's a month. Maybe it's a few more months. I don't know. We'll see what happens with that, right? But because hedges can be very active, might be in it one day and out the next, right? Because these can move huge. Like this one's already moved 40% up for us, $12,000 up, right? So I'll do stuff like that, right? Because I know a stock like Toll, if the market gets shaky, a stock like that's going to go down substantially, right? But then I'll also hedge with cash. I'll hold heavier cash piles in time periods when, it's great times. And I'm saying, you know what, let me have some cash here as well. So I might just go a little bit more heavy cash. And that's something you can do to help hedge. You don't always have to worry about buying put options and those sorts of things and trying to figure out what the perfect company to bet against is if the market goes down, blah, blah, blah. You don't have to play that high level of a game. You can play a game of just I'm going to hold a little heavier cash. Where people get into trouble is they go too heavy cash. And then they end up in a dilemma. And I see this time and time again from sometimes people that have been in the market even several years. They'll go too heavy cash. Market keeps going up. And what happens? Even those investors get FOMO. And next thing you know, crap, man, I got to pile money into something. And they start getting FOMO. And next thing you know, they're piling it right back into the market, right? At much higher prices than what they bought before, and then the market will dip right after that, right? And then we'll have a major correction or crash in the market. And oh my gosh, I knew what was right being on the sideline. It's no, you were wrong because you tried to play out. Instead, you just screwed yourself twice, right? You could have got screwed wrong. You could have got screwed once, but instead you screwed yourself twice. You could have just held through, market dips, blah, blah, blah. Okay, you make it through the other side, survive the bear markets. It is what it is. It's part of being an investor. Bear markets are part of the process. You're going to be down sometimes. Boom. But instead, you screwed yourself twice. You sold at a bad price. You then had to buy back in at much higher prices because you got FOMO. And next thing you know, after that, you went down much more substantially than you would have, right? And you probably had to face tax implications on all that, right? At the end of the year, which is just a whole other brutal situation to go through. And so then you might need to pay those taxes with money you just went down massively on after you bought at crazy prices. Talk about really getting screwed. This is why every great investor will tell you, don't time the market. Invest over time. If there's certain time periods you want to be a little heavier cash or a little heavier hedge, okay. But don't try to time it in terms of I'm going to sell all my stocks, sell a big portion of my portfolio, I'm selling half of it. Okay, that usually just works out very, very bad. And I've never seen it done where it's done properly. It always ends badly for people, right? So next question is, what stocks will investors fly back to? Right? Once this honeymoon wears off that we have in the market right now, and a lot of optimism and hope, whenever this wears off, whether it's February or April or May or the summertime, whenever the honeymoon wears off, where are people going to look, right? Here's where they're going to look. They're going to look to companies like e.l.f., right? e.l.f., cosmetics company. This is a sort of company that actually, for the past year or so, a lot of people haven't wanted. They're cosmetics, makeup, beauty product, put me to sleep. It hasn't really been the play, right? But as soon as things start to get a little shaky and you're not in a honeymoon time, people start to say, oh, I want needs-based businesses. Oh, I love makeup. People are going to buy makeup regardless. Whatever's going on in the world, tariffs, no tariffs, inflation, no inflation, people are still going to buy their makeup. And we've seen that with e.l.f.'s numbers over time, right? They're still going to buy beauty products. They're still going to buy foundation and lipstick and all that stuff. So, e.l.f. starts to catch a bid, right? Nike, they've made it through decade after decade after decade after decade, and emerged stronger and stronger each time from every single down cycle. And people are at the end of the day, people got to buy shoes. They got to buy hoodies. They got to buy clothes, right? It's just part of life. And so Nike being this catch bid, great value, great dividend stock on that one, right? They start to say, you know what? regardless of what's going on in the world, stock market crash or no stock market crash, whatever, people are going to drink their energy drinks. They're going to drink Celsius. They're going to drink Monster. And so stocks like Celsius, Monster, those ones which have not been the play for the last year or two, right? Look at Celsius stock the last 2 years. Look at Monster stock the last 2 years. Those haven't been the play. People haven't wanted to be in energy drink companies the last couple of years. No. They want to be in Nvidia the last 2 years, right? They want to be in more growth-related stuff. They want to be in Bitcoin. But as soon as things get shaky, then people say, dang, I drink a Celsius every day. Maybe I should invest in that company, right? They start to look back to those sorts of companies. Cheesecake Factory, restaurants, right? People still got to eat. They still got to eat. They're still going to want their dang cheesecake. They're still going to go to North Italia. They're still going to go to Flower Child. Like, at the end of the day, people are getting lazier and lazier and lazier when it comes to cooking. Restaurants continue, especially the top-tier restaurants, continue to do better and better numbers over time, right? They'll pile into stocks like that. Great dividend yields on those ones. Honest, HNST, stocks like that. Beauty products, lotion, soaps, diapers. Well, regardless of what's going on in the world, you got to buy your baby diapers, right? So these stocks begin to be the play, right? If things get a little more shaky and a little more uncertain, like what's going on here? Like, I don't know, right? So in honeymoon times, which is kind of what we've been in for the last, I would say 2 years, in kind of like in even a bigger honeymoon phase right now, Bitcoin, high growth stocks, story stocks, those sorts of things are really what does very, very well in honeymoon times, right? Now, when things start to get a little shaky, you start to get a little more uncertain in the market, value stocks, dividend stocks, the dividend yield, right? Needs-based companies, cash, those ones start to become the plays, right? That's where money starts to move. And so when things get more uncertain, money moves out of Bitcoin, money moves out of high growth stocks, out of story stocks, right? And starts to move into these sorts of places. And dividend stocks definitely catch a bid during those times. Like if you look at a lot of dividend stocks in 2022, a lot of them held up very, very well. Like it was extraordinary how well so many of those dividend and value stocks held up in 2022. While tech stocks are just getting obliterated. Nvidia, Meta, go through the whole list. They all got wrecked, right? AMD, Netflix, Shopify, the whole list of them. They're all down like 40, 50, 60, 70, 80%, right? And meanwhile, a lot of those value and dividend stocks were hardly down in 2022. Some of them were even up. And it's like, how? With the market getting leveled like it is and some of these value, because you're in a different market at that time. You're more uncertain. People are like, I don't know what the Fed's doing. I don't know what's going on in Russia. I don't know, blah, blah, blah. I'm uncertain. Where am I going to go? Treasuries. I'm going to go dividend stocks. I'm going to go value stocks, right? Needs-based companies. A lot of those catch a bid during that particular time, right? So you just got to understand the game and how it's played and the rotation of money. And you got to understand also who dictates the market. Who dictates the market is the big funds, right? The big institutional investors. Like those ones are the ones that really dictate the market. And so those ones are ultimately the ones that are going to kind of push whatever stocks are like if the big money wants to push Bitcoin in high growth stocks and story stocks, they'll push those. Like it's not rocket science. At the same time, if that big money also starts to flood out, right? You as a retail investor who's got $100K in the market or $1 million in the market or a few million, like you're not doing anything. I'm not doing anything in the market. I'm part of the 1% and I'm not doing a damn thing in terms of me shaking the market. Like it just doesn't work like that. I don't have enough money. You need to have many, many billions of dollars in a fund or something like that to really matter at all in terms of what happens with Bitcoin price or what happens with growth stocks or story stocks or any of that, right? So in certain times, this is where money floods back to, and people say, I can't get gains in Nvidia right now, so I'm going to flood into dividend stocks, right? And so, but that happens after the honeymoon phase is. We're still in the honeymoon phase. You got to understand that. So these are still the play until the honeymoon phase breaks, whether that's, once again, 3 months from now or 6 months or 9 months from now. It's going to break at some point. Once that breaks, boom, these are no longer the play. Everybody's going to flood out of those, right? And then money's going to flood into these sorts of things, right? And so I warned you guys about everything that was coming here, right? These 3 videos here. I warned you guys about this thought process of people trying to sell out of stocks, thinking the market's going to crash, and now they just missed out on a crazy amount of gains. I mean, crazy, right? I warned you guys about the great melt-up beginning. I warned you about that we have a stock market melt-up 2.0 was coming, right? And this is how everything has played out. And so now I'm just trying to get your guys' mind focused on 2025, right? I'm trying to get you to understand what's likely going to transpire in 2025, that we're going to have kind of this end blow-off top honeymoon phase, and then we're going to start to get some drama. And it doesn't mean that's the end of the bull run necessarily, right? Because we could, if we're on a 5-year bull run, like even if we get some drama, all it's going to be is, 2 to 6 month drama, and then the market's going to start to move up again, right? And it's just a big buying opportunity. So that's just something to keep in mind there, right? So yeah, appreciate you guys joining me for always. I hope you appreciate me doing this video for you guys and trying to keep you in the loop on what's transpiring, what's going to transpire, and all that good stuff. Okay, if you're looking to take your investing knowledge up to a much higher level, you're somebody that's very ambitious, you want to apply to join my private stock group and get access to all my course curriculums, access to exclusive videos from me, the private Discord chat, the 6, 7, 8-figure communities. You're looking to be part of a great community of high net worth investors and things like that. Click the pinned comment down there, fill an application. We'll see if we can get you access to all that later on this week. Much love and have a great day.